All right. Hey, everyone. Okay, cool. Thanks for joining me, everyone, for my weekly price action analysis forecast. So, in this session, I want to talk about what's going on with Bitcoin, the stock market, and gold. Plus, I want to spend time, most of the time, answering your questions. So please share your symbol or your market in the chat now. So once I get through my portion, I could spend a considerable amount of time on yours, on your questions. Okay, so with that being said, let's get this thing started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, if you'd like to share the country of origin, where you're from, it's always nice to see something like that. It's just a fun thing to put in the chat. I see people do it automatically now. They just put the country that they're from. So it's always nice, especially when I'm simulcasting on TradingView. All right, so let me know if there's any problems with my volume. You should not have a problem. It should sound good from what I can tell. All right, but just let me know. Feedback is always appreciated. All right, so first things first, let's take a look at the economic calendar. Now, there's one on TradingView. Oh, let me adjust my mic. Hold on a second. All right, so there's one on TradingView. Let me just get in a picture. There we go. Let me get this a little closer. Okay. So like I said, there's one on TradingView. You should look at that one. I use a different one just because it's the one I'm used to using, but it doesn't really matter. Okay, so what I'm looking for are just big, important events to look out for the week. All right, for the coming week. Here, let me put this over here. That's better. All right, so let's take a look at what we have here real quick. And the timestamps, you should just double check if there's any big reports coming out or any major news, scheduled news. You should check the timestamps, double check them. All right, so we have on the 29th, which is tomorrow, Germany, harmonized index of consumer prices. Then we have non-manufacturing PMI for China. And on the 30th, we have for the pound, GDP, all right. Also, we have consumer price index for the euro. European Union Consumer Price Index. On the 30th, we have ADP employment change for the US. That usually comes out at 8:30 a.m. Eastern time, by the way. I just happen to know that. Or actually, no, is it 8:30? No, I'm thinking of NFP. No, that usually comes out around 10:30, I think. Anyway, like I said, double check. Also on the 30th, we have the Tankan Large Manufacturing Index for Japan. These are not big numbers, okay? There's really nothing big here. Trade balance for Australia on the 30th as well. And then on July 1st, we have German retail sales. We have US ISM manufacturing PMI. And we have the Bank of England Governor Bailey's speech. Okay. And then on the 2nd, which is the first Friday of the month, we have non-farm payrolls, or NFP. Then after that, we have Australia retail sales. So we have one important event this whole week, and that is the non-farm payrolls for the US. The reason why that number is so important is because, well, first of all, it's usually the most important scheduled economic event that we see at the first Friday of every month. Technically, the Fed uses that number as one of their variables to gauge interest rates. So if there are any surprises in that number or something where the market can interpret, a hawkish Fed outcome or a dovish Fed outcome from the Fed, just interpreted from that numbers, you can have a dramatic move in the market either way. The idea is not to trade the number. The idea is to be prepared for a range expansion. So it helps you to mitigate risk or manage risk. That's the whole point, okay? So I just wanted to point that out. Again, double check on your economic calendar. Let's move on here. And again, I appreciate everyone's questions and your comments. Okay, cool. Oh, I got G-Manel from the Bay Area. Hey, good to see you. Oh, Kuala Lumpur. We have Jude. Hey, Jude, I remember you, Jude. That's the name of a song. Anyway, yeah, okay, cool. Welcome. So, yeah, I'm broadcasting from the New York City area, the northern New Jersey, which is I'm about 15 minutes away from New York City. And it's funny, Sean here mentions in the other chat that they got weather problems over there. And he's also on the west coast of the U.S. And not sure what public company sells air conditioning in Oregon or Washington, but probably time to buy. Yeah, it's funny. Well, in New Jersey, I looked at the weather report earlier, and they're pointing to hot weather or whatever. Or I don't know, I guess we have to be dramatic in New Jersey. I know there's a heat wave over there on the West Coast, but there's no heat wave here in New Jersey. They just have to pretend. They just like want to, they want drama here. So they're kind of like, they're kind of hinting toward that too. Come on with this news. Anyway, all right, well, I hope you stay cool over there. All right, so let's talk about Bitcoin. It's the first thing I want to get into here. Look, this situation, all right, now we've been talking about like the buy signals. Let's talk about this. It's a very tough area, okay? At this moment, 30K still stands. 30K is still the support that's in play. People are asking questions like, every time it touches, does it weaken it more? What are the chances we're going to go to 26K and all that? We can't really put a number on that. I know everyone wants me to say something like, there's an 80% chance that we're going to go to 20K by Friday. That's what everyone wants to hear. And a lot of vendors will say things like that, even though there's no way to know. So, like I said, I don't sell fluff. I don't sell dreams. I don't sell anything. I sell reality, right? I promote reality. And the reality of Bitcoin is this. 30K holds. As long as it holds, then that's the support that we have to measure risk from. It's that simple. Now, some people may argue and say, but it went to 28.5. Yeah, but it didn't stay there very long. As you can see, 28.5, we have a pin bar. So someone stepped in there and bought. Someone or some people, group of people, whoever, there's buying activity there. Not only that, we have another little mini pin bar from the other day. I wrote a report on TradingView on Saturday night. You should read that report if you haven't. I talked about this potential idea developing. Now, we're not in a hurry to take more trades here. We put out an aggressive swing trade on the original pin bar. We're not going to keep putting them out, right? The same trade, because for one, if the thing can't get its act together and it can't get going, that's just not a good sign. But at this moment, we can't really make any judgments on this price action. All we can see is support, resistance, and how that relates to the bigger picture. The bigger picture here has not changed. The bigger picture is still bullish, generally. Now, when I'm referring to the bigger picture, I'm talking about all of this price action here, right? That's the bigger picture. Recent price action is consolidating or range bound. Now, I refer to wave 4 a lot, and people are confused as to the wave 4, but this is your wave 4, this whole area right there. That's wave 4, not this little consolidation area. That's just part of it. So as long as that 30K holds, hey, I'm anticipating, a test of the 40K area. If this thing turns now and tests 30K again, and we clear 28.5, meaning we close below it, then the level is broken. At that point, I would be anticipating 26K, potentially 20K. Now again, the whole point of this forecast is to get an idea of what scenarios are possible as the week unfolds. So that's what you need to prepare for. How is that helpful? Well, for one, this is not a good place to be going long. Okay, just for one, at this point, if you're not going long, like the more recent buy signal was at 32.7, so maybe like 32.8, 32.850, something like that. And your risk, yeah, you could define your risk from the pin bar low at 30, just basically 30 even, but the real number is 28.5. Okay, so which level you use is going to be dependent on you and what you're comfortable with, but that's what the structure says. So at these levels, near 34, near 35, it's just not, the risk is not worthwhile, especially because of all this. We have minor resistance in the midpoint area here, this 35, 36K, which it's having a little trouble with. And then you have 40K. So if it tests that, it's got to clear it. It may not. So it's a mess. So there's no reason to take a lot of risk in this environment. It's slow. And as you can see in this situation with Bitcoin, right? Bitcoin's not really going anywhere. Most of the altcoins are going nowhere. Like I've been telling people, they follow the leader. If Bitcoin's not going anywhere, unless they hype one here or there, sometimes you get like a hyped one, right? And it moves a little bit more or whatever. They don't go very far if Bitcoin doesn't agree. So again, this still proves to be the leader. Maybe at some point that will change, but until that changes, we have to go with what incomplete information we have now, because that's the only information we can judge. We have incomplete information. I get people also asking me, well, how do you know this? Well, how do you know that? You don't. You have to take risk based on incomplete information. So it really comes to the risk. How much risk are you willing to take? At these levels, We're not willing to take more than 5,000 points of risk. If you are willing to, one way to adjust is smaller size, okay, to keep the risk lower. I know people don't like that because it means if the trade works out, you make less money. But this game is not about making money, all right? Believe it or not, the game is about managing risk, and the positive outcome or profits are a result of good risk management. It all begins with the risk and how much risk you can afford to take or you're willing to take. Okay, it starts there, and people don't want to hear that. I understand. But that's why most retail traders don't make money. All right, so that's the Bitcoin situation. So if you have any questions about Bitcoin or altcoins, just put them in the chat and we'll go over them. Now let's talk about the stock market real quick. All right, stock market, because stock market is, I'm sorry, I have to say it's in ridiculous mode. I have to call it that. Yes, that's an opinion. I don't trade on opinions, but this is why I call this ridiculous mode. You're going to hear a lot of talk in this situation, a lot of the expert talk. You're going to hear, well, sector rotation and, money's flowing into the semiconductors and blah, 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 blah. Yeah, that's nice. That's real nice. And this environment is great for day traders because why? Day traders are not exposed to this magnitude of risk of retrace. Now, what is that? Risk of retrace. Well, we broke out of this reversal zone, which I said earlier, right, in previous streams, also in the chat room, I said that this is a bullish situation, okay, and we get questions about, shorting this thing, which I've been saying it's still early because we're just not getting the setup, we're not getting the signal, but we have a high risk of retrace. So what that means is the higher this thing goes, the greater the chance of retrace. So it makes it very hard for swing trades and position trades. While day trades, again, if you're in a stock and you're grabbing whatever, a few points, whatever it is you're grabbing out of a stock and you're out the same day, well, you're not exposed to this potential pullback that we can get from this, right? This thing can easily pull back 300, 400, 500 points over a couple of days. So that's one potential scenario, especially as we go toward NFP this week. I wouldn't be surprised. And then what will you see in the news? Well, profit taking before NFP because they're taking profits and we can't explain any other thing. So we're just going to say that. That's what they're going to say, right? But the location is a very tough location. I've been saying that all along. I've been saying that since it's been working its way through this zone. Now, it doesn't mean we avoid swing trades altogether. I mean, look, we sent out Blink. This was a trade of the week. This went to target 1. It almost went to target 2. What's today's high? 44.45. Target 2 is 46.5. So not almost. But the point is, we're not staying away from longs altogether, and we're not rushing into shorts. What we're doing is we're just being very cautious. As a swing trader, you don't want to get overly exposed. You don't want to have too many positions on because when this thing turns, and again, the turn can come out of nowhere. It can occur overnight. There could be some catalyst or whatever, unexpected news, whatever. Next thing you know, turns into a pin bar, right? Next thing you know, it's 300 points lower. And then, no one told me. How come the experts on the news didn't tell me? Blah, blah, blah. Well, yeah, it's because the location is vulnerable. So you have to, again, this goes back to managing the risk. Should you be going crazy long up here? Should you be complacent and say, oh, the stock market's safe? Just keep buying tech stocks because sector rotation, right? That's what the guy said, sector rotation. Yeah. Just keep buying NVIDIA. Just keep buying them. Just keep buying them. They won't pull. They'll pull back a little bit, but they always come back. There'll come a point where you'll have a broader retrace. Now, we've seen recent broader retraces like this one, and we have this one here. They don't go very far. So these situations, like something like this, that's an opportunity for swing trades, possibly even inventory in those areas. But what you have to watch for is when the supports are cleared. Right now, that key support right there is basically 12.9. We can round that to 12.9. If that's cleared, then we're probably in pullback mode, like real pullback mode, all right? Now, let me point something else out because we keep getting questions about this too, and they're good questions, okay? S&P. So the S&P is barely up today. It's up like 4 points. And again, it was actually negative earlier, while the NASDAQ is up, 150 points or whatever it is, and the Dow is negative, the S&P was negative. this relative weakness is certainly a red flag because they should be moving in tandem. They should be moving together, which means the S&P and the Dow are in much more vulnerable positions. So if that selling activity comes into play, these things will probably get hammered faster, right? That's very important for market stocks. Like if you're involved in Microsoft and Intel and Tesla and stocks that are really highly correlated to the market, that's where you have to be careful with this type of situation. Just keep something in mind. And I remind our people all the time about this. This is not a support level, okay? This is definitely not a support level. So you have to treat it with caution. All right, so I just want to mention that real quick. Let me know if you have any questions. Let's talk about gold real quick, because gold is also, this is one of those situations where logic can get in the way. Can't let logic get in the way. I wrote something in my analysis in my TradingView article about the liabilities, I forget the word that I used, of human nature, obstacles. Human nature gets in the way, all right, of our decision making, and it's something we all have to deal with. So logic, right, conventional wisdom, logic, is something that often gets in the way when you're trying to do something with gold. Why is that? Because you say, well, you know, we have inflation, food prices are higher, everything is higher around me, blah, blah, blah. So, you know, that means dollar is weaker. That means gold should be going higher. So I'm going to buy gold, right? And then gold's going lower, and it doesn't make sense. Don't get confused by that. Oh, I got to search the news. I got to find out why. Why is gold not doing what it should be doing? It's because it's the market. Markets are highly irrational. They can do whatever they want to do. That's why chart analysis offers some sort of value rather than people that like to hear good stories all the time. Okay, that's why all these news organizations make money, because they tell good stories, and people like stories because it appeals to our conventional wisdom. Oh, that makes sense. Yeah, right. I'm going to do this because it makes sense. Yeah, okay. But markets don't care about what makes sense to us. They're just going to do what they're going to do. And the reason for that is because smart money has different information than what we have. So they can act on things that we have no clue. And by the time it gets to our attention, they've acted on it, right? That's called price is a discounting mechanism. So the market looks ahead 6 months and starts pricing things in. That's the smart money. We don't have access to that, okay? They have advantages that we just don't have. So we have to guess with incomplete information. Charts can help us do that if you extract the right information. All right, so back to gold. Gold is developing a potential lower high. So is this a good time to start buying gold? No, I'm not taking a swing trade on this structure. I mean, I see a bunch of little pin bars up in here after this bearish movement, right? It's a pullback. It's a bearish structure. I'm not calling that a trend because we know the bigger picture trend on gold is bullish. But this situation here, it's trying to develop a higher low. It's just not going anywhere. Now, gold is one of those things that just has like a move. It comes out of nowhere. Moves 30 points, and then that's it, right? So this is just, I think it's a little early to start taking risk on this thing because of this bearish structure. If this bearish structure wasn't there, if it wasn't so steep, then I'd be more interested in this. So basically, I want to see more stability. Now, this doesn't mean, I'm talking about this from the swing trade perspective. This doesn't mean you have to ignore stocks like Wheaton Precious Metals. That's a gold miner. Newmont Mining, another gold miner. Now, they look similar to gold, but these are places where you can pick up some inventory because it's a pullback. So eventually, gold will likely resume that bigger picture trend if we get the inflationary scenario, and that should be good for these stocks. Now, if you're not in these at all, again, you don't want to sit there and take large positions because if gold breaks those supports, these things are just going to go lower. But if there's any place to pick up some inventory, this is a pullback. So when you're dealing with inventory, it's really less about the price structure and price action and more about your size. So, you know, in something like this, if you normally would buy 100 shares of Wheaton Precious Metals, which is a $44 stock, you know, perhaps you buy 25 shares or 15 shares. So if gold breaks those supports and this thing goes a couple, you know, goes lower by a couple of dollars, you won't feel much pain, okay, on 25 shares or 15 shares, and it's a good opportunity to put on more. Again, these aren't garbage altcoins. These are quality stocks that are following gold, which is a proven store of value for thousands of years. These aren't garbage altcoins. People always want to build inventory in garbage altcoins. Garbage altcoins are, I call them garbage because they're not proven and they're high risk. Okay, what's Wheaton going to do? Go to zero? I don't think Wheaton Precious Metals is going to go to zero. It may go to 30, okay, 35 or something. If gold's going to have to get really hammered for that situation, but that's what you're dealing with. So bigger picture, it's not as risky as something like an altcoin. All right, anyway, so I just wanted to mention those things. How am I doing with time? Let's see. Okay, not too bad. I covered all my things in about 20 minutes. So I want to answer your questions now. Please, in TradingView, you can put some questions in the chat. Usually I get tons and tons of questions in there. But you know what? I'm not too surprised. I don't have a lot of viewers over there, and it's probably because, if you notice, the market's very slow. A lot of people are probably not in the market right now, right? And that's low volume environment. One thing I want to mention is that this type of behavior that we're seeing right now, let's go back to Bitcoin real quick, and I'm going to get to the questions. This type of behavior that we're seeing here in the stock market, this is also typical of a low volume environment. Low volume environments are the usual thing from like June to like October, believe it or not. Okay, that before the year before, your typical behavior was something like this. And as the months go forward, like once you get into like August and stuff like that, it really gets tedious because the volume, there are no big players in the market. That's who moves markets. When you see big moves, it's because there's heavy volume. So in these light volume markets, a lot of times you're better off just staying out. Okay, so I'm not too surprised to see a lot less people here on TradingView. I usually get like 100 people on there or something like that, and I don't see that. So that's an interesting piece of information. Either that or I'm getting really unpopular. All right, let's take a look at the questions that I got here. Hey, Wedge, good to see you. Okay, Sean, I saw you. Hey, good to see you also. And again, thanks for joining. Hey, Alex, Brian, from the UK. If you get time, could you take a look at Eno for me? That trade that Andrew highlighted. Okay, yeah, sure, Eno. So INO. This is, now, see, Eno is a pharma stock, right? And these stocks tend to do their own thing. They're not highly correlated market stocks. That's one nice thing about them. They usually they usually move on news. That doesn't mean you trade the news, but that's usually what is the primary catalyst of these things. So technical analysis can still help us at least manage risk. And that's really the best we can do with these things and give us rules to help filter out potential opportunities. Oh, G-Manel sent me 350 coins. Say thank you so much. Again, you don't have to do that. I appreciate that. It's very generous of you. Thank you. Thank you. So Eno, this pullback here, look, you have a bearish pin bar developing. The market is still open. It's going to close in about 20 minutes. You have this bearish pin bar off of a potential double top. So that's not a good place to be buying Eno. I remember he mentioned something. I just don't remember exactly what he said about it. But he likes these higher low. I could see what he's looking for, the breakout. Not my type of trade. Okay, I don't like those type of trades because the potential fake out, in my opinion, is high. Now you have a couple of good things going for you here. You have this initial move and you have the higher low, right? Those are good things because they're telling us that the structure on this thing is changing. Okay, that's cool. But what you're looking for, though, is the breakout. All right? I mean, that's the strategy behind this at 1032. So you figure around 1050, 10.5 would be the breakout. At that point, you have to decide how much risk you want to take. There are 2 points where you can measure your risk. The first point will be the breakout candle, right, and the low of that candle, or maybe the candle behind it, which may be this current candle, right? You're looking at something like that, basically around $9. That's the more, I should say, aggressive point to put it, because there's a good chance that that's going to get stopped out. The structural point is this low here, which is 840. So you figure around 8.25, right? That's where your stop would have to go on that type of situation, and you need follow through to keep that thing going. Meaning, if it breaks out, you buy the breakout, and next candle turns into a bearish pin bar, kind of like what you see here, just a little higher. That's what you don't want to see. So that buy signal can turn into a sell signal very quickly, and that's where you have to be able to adjust. Because we can't even send things out fast enough sometimes to adjust with those things. That's why a lot of times I won't send out adjustments. It's like, look, we assume we figured out the risk. The risk was within reason, within our within our scope of risk, and that's it. It's like if we can't take the risk at all, we shouldn't even be calling the trades, right? So that's why a lot of times I won't send out the adjustment. On top of that, usually, not all the time, but usually, reacting to a piece of market information like something like this, reacting to it is usually the wrong thing to do, because a lot of times it's just noise. Not all the time, though. Sometimes it's a good idea to get out. But we're usually very specific about those things. Anyway, thank you for bringing up Eno. Let me see what else I got here. I got a couple of questions in my other chat. Let me see what I got here. Okay, so it's a Neo. All right, Eno and Neo. Look, they're almost the same letters, right? Okay, so look at Neo. Man, that nice little breakout there in the electric vehicle sector. Okay, so this is like, if you're not in this, this is the breakout. If you're not in this now, you're chasing it. The breakout level was here at what? 48.36. This thing right now is at 49.36, only $1 higher. You had another breakout level back here at 46.58. That was obviously a much better price. We're looking at this after the fact. So if you're in this, great. What do you do here? You take a little profit off the table, right? You should be at least greater than 1-to-1 reward risk. Even if it's at 1-to-1, take something off the table, all right? Even if it's a small amount. And then at that point, you let it run, because there's no reason to get out of this. There's no sell signal. There's no red candle. It's just a big green candle, and it looks like it's going to close strong. So nothing to do there, but let it do its job. Now, it doesn't mean that tomorrow you won't see a red candle develop like this. I mean, it's possible, but until that develops, there's nothing to do. So that's why I always tell people, when you have something vertical like this, just take a little off. It's a good habit to get into. I know greed steps in often. I'm not taking any off. This thing's going to go higher. I'm going to double my money. Right. And then it turns, I should have taken some off the table. You don't know. There's no way to know. So that's really going to depend on that part of your personality, how you want to deal with that. But that's why I say take a little off, let it ride. At that point, if this thing can deliver another green candle tomorrow, then you can start putting a trailing stop, manual trailing stop, 2 candles behind. You're never going to sell the top using a trailing stop. You're going to get knocked out near a low. That's the nature of a trailing stop. The benefit of a trailing stop is it opens the upside. In case it wants to keep going, then you're letting the market pay you more if it's going to do that. But if it's just going to be noisy and blah blah blah, then it's not always the best choice. In nice strong trend markets, sure, but this is a questionable market, especially because we're looking at like some of those other, like the S&P and stuff like that. They're not doing that great. So this looks like a party right now until it turns not into a party, right? Let's take a look at some other ones in the sector. So NKLA, it's another electric vehicle stock. Okay, they're all trying to pop here. Blink is also in the sector, right? That was the trade of the week I mentioned. I mean, they're all trying to do something here, but Neo obviously has the nicest move out of all these. So okay, let them do their thing, and that's why we set targets in advance, as you can see on this chart, right? There are targets there in advance because we exit the trade while the buying is there, while people want to take it off our hands. We don't sit there and react to information. Now, sometimes it means we get out earlier because it goes further and further, but who cares? As long as we're doing better than our reward risk, that's all our objective is. It's not to squeeze the most out of a trade, because we know that that's not a very effective way to do things. Okay, so thank you for asking about Neo. Let me see what else I have here. Took a lot. Oh, good. So Green Mantle says took a lot off the table. All right, very nice. Oh, that's why he gave me 350 coins. Oh, thank you. I'm glad you took something off the table there. See, so I went through that whole speech, and he automatically took something off the table. Right? Nothing wrong with that. So let's take a look at Euro. We have a question here for Euro from Jude. So this Euro, what does this look like to you? What does this look like? Does this chart look familiar? Let's see. Let me ask a quick question of the chats. What does this chart look like? Let's see if people are paying attention. What does this chart look like? Does that look familiar to you, this Euro chart? What does it look like? We looked at it earlier. I'll give you a hint. We looked at one that looked very similar earlier. Who can tell me? Who can tell me? I know there's a little delay on this other chat here. Who can tell me what chart does that look like? Because the answer is, there we go. Porcar said it. Gold. Okay, looks just like it. Which means what? This is a function of the dollar. That's what this means, right? Gold. Another one. Kavi says gold. Looks just like it. So what is this really? What it's really is a reflection. Here, I'm going to show you. It's a reflection of the dollar index. I mean, look at the dollar index is the inverse, right? So it looks, if you flip that chart the other way, it will look like this, the inverse. So the dollar is trying to develop this higher low and trying to go higher, which after such a dramatic move, that's what I'd expect out of the dollar. Okay, so going back to the euro, he wants to know about the euro. This euro, just like gold, and as we saw, the inverse of the dollar is setting up for a short. That's what that's setting up for. We have a bearish pin bar. In fact, the sell signal is in play at, what is the low there? 1902. Is that the previous low? No, I'm sorry. 1926 was that pin bar low. It took it out, but as you can see, it's not following through. So what do you do in these situations? I mean, that's the setup. You have the lower high. I would at least expect with this type of structure, I would expect at least a test of this low, which is what, 1881. I'd expect a test of that. But what do you think is holding this market back, along with the dollar? Any ideas? There's something holding it back that I'm going to mention. I just want to see if people know what I'm talking about here. What do you think is holding this thing back? Anyone in the other chat? In the non-trading view chat? Gmail mentions gold too. Cool. So, yeah, you guys are on it. You guys are on it. I like that. But what do you think is holding this back? It's going to hold the whole Forex market back. What do you think it is? Any ideas? And if you don't know, you can just also put I don't know. That's okay. You know, this is what we're talking about here is like, it's called intermarket analysis, where you're comparing one market to another because they have an effect on each other, an intermarket relationship. All right, that's really what relative weakness and relative strength is all about when it comes to the S&P and stocks and the dollar and all that. But anyway, okay, so I don't see any answers. So what is holding this thing back? NFP, non-farm payrolls, because I'm willing to bet that this market is not going to make any significant move. I mean, unless some other catalyst comes along and pushes this thing, right? Todd says, I don't know. NFP. Well, NFP is a very big number when it comes to Forex because the dollar is so sensitive to it, which means all these dollar cross pairs are going to probably be tough this week or indecisive going into NFP. Large players probably don't want to take any big risks or put on any large positions until they know that there are no surprises. So the NFP is either going to turn this thing around, possibly, or keep this thing going lower. Structure says bearish, but NFP can change that. So that's what you have to keep an eye on. There's an ADP number the day before. So that's what the market is going to be pricing in. So that, along with gold and everything else, that's probably going to be a big factor as far as if this thing can maintain this bearish momentum. If it can, because there is a sell signal in place. All right, so let me just go back to this. With the sell signal in place, let's just say you shorted it because everything is there for a short. So let's say you shorted it and it's just not behaving. Well, you have your stop. You should have your stop right above this high here, which is what? Basically 19, you could put it like 1980 or maybe even 120. Give it a little more room, right? That would be a place for a stop. And you either let it go there because that's the structural risk, or if this candle doesn't behave properly and it takes out the high of the candle, you just get out earlier and take the loss. Okay, in those type of situations, because when you get a short in these things, the candle should be closing weak. This is not a weak close, and we still have some time before this thing closes. But that's when you're trying to play the short side, you need to see that follow through. Otherwise, that lack of momentum could be a sign of buying activity, right? At this moment, that's what I would argue, even though the candle is not closed yet. So you can't act on this information. The best thing to do is just have your risk under control and then see what new information the market delivers over the next few days. Okay, so cool. That's a good question. Thank you for asking about that. And you guys are on the ball. I like it. So let me see what other questions we have here. All right, Alex, what are your thoughts on using hidden RSI? I don't use RSI at all. That's a good question. These oscillators, you know, I know a lot of fake gurus like to bring them up and they like to use them and they like to point them out as a gimmick and this and that. And people think that there's some kind of advantage to using them, but they're not. All oscillators are based on previous information. Okay, I think we all know that. They are some formula that smooths out price over time. So I don't use any of that information at all. Now, for intraday, if you're day trading, it can help you somewhat because, again, the goal of the oscillator is to smooth price. And one of the problems with day trading and looking at smaller time frames is the noise can be ridiculous. So they can help you smooth out price at times. But I'm not a big fan of them. I've worked with some specific oscillators for a very, very long time, and I can tell you they offer no distinct advantage at all. You just have to know how to see through the noise on the charts. But I like to use levels, trends, and structures because usually they're more relevant to the actual market behavior than some oscillator that's looking 14 bars back. Okay, so thank you for asking. Go forth and multiply. This is so boring. Please tell Bitcoin to do something. Yeah, I understand. I mean, like I said, low volume environment, Bitcoin is reluctant, right? This slow period, you have to have a lot of patience in this. Like I said before, either wait for a good level and wait for that reversal off that level. And at that point, when you can take your risk, you take your risk, and that's the best you can do. If it goes to your stop, which you should have, for a swing trade, then it goes there. And that's it. That was the risk you were willing to take. If it's inventory, which is not the same, and you've taken a few small bites in this area, you don't want to keep taking small bites at the same prices. It's a bigger and bigger position. That's more and more risk. You have to wait for the next inflection point, and that may be 26K. We don't know, but it might be. We have to see. Only the market can prove that. And at this point, the market is not showing its hand. This is a really tough spot to be doing anything. If you have no inventory, or maybe you've taken one bite and you want to take another smaller bite, okay, fine. You know, as far as inventory goes, because right now, like I said, it's the level. But the whole idea with inventory is as it goes lower and lower, you want to put on a little bit more and a little bit more. And at some point when it reverses and the structure changes, you can continue to put on more. But you need to avoid getting too big too fast. Okay, I've talked about that many times. So thank you for mentioning. Kavi, okay. From Meridius, I can't even say that. Wow, I'm not sure where that is, but thank you for mentioning that. Thorium, okay, from British Columbia. Hey, welcome. Oh, it's hot there too. Okay, so 93.2 degrees and 45. Okay, wow, really? That's, you know, it's like around. They're saying here in Jersey it's going to be like in the 90s too, but I thought that was like normal for summertime. I don't know why. You know, I don't know. I thought like over 100 was hot. Anyway, okay, I could be wrong. But thanks for mentioning. It's always good to hear the weather. Thorium, can you take a look at XMR? Okay, we got an altcoin. Let's take a look. XMR USD. So this altcoin has a tendency to act somewhat different than Bitcoin, right? It has its own little behavioral traits, we can say, but it doesn't go very far without Bitcoin's approval. So in this situation here, you have this lower high, like equivalent to like the Bitcoin 35K. But look at these candles. While Bitcoin is not exactly showing, you know, much progress, this thing gave you a little buy signal and it's trying to hold on to it. But you know what? In the bigger picture here, it doesn't really mean anything because this thing does not really trade on its own. So it's the same story as Bitcoin. Your risk can be defined by this pin bar low at a 180. Okay, that 180 area right there. And it needs to clear 227, or basically 228, 230. It needs to take that out. That's a minor resistance, by the way. That's not even a real major resistance. Because in order to prove that the structure is changing, you need to clear this resistance up here. You need to clear it, which is equivalent to like the 40K on Bitcoin. Right here, let me see. Let me pull something up here. USDT. Let me just see something. Yeah, okay. It's the same deal here. I'm just going to erase this line over here. So, here, hold on. So that's what you're dealing with these. And I'm sure many altcoins are going to look similar. If you look across the board, they're all going to have some kind of, I'll call it a minor head and shoulders area up in this area here, and a test of the near, like the lower part of it, right? Most altcoins are going to look like that. So they're waiting for Bitcoin to make a choice. If Bitcoin clears that 30K, you're going to see these things get hammered. Now, another thing you're going to see in these situations is a lot of would-be authorities are going to be calling for longs all across the board here. Oh, it's a long. Oh, it's a long. You're buying the bottom. Blah, blah, blah. Don't listen to people. Don't listen to me even. Listen to the chart. The chart gives us the most information that we can work with, the most accurate and the most valuable information. Nothing else, especially people. People react to things. They're emotional and they have opinions. They have all kinds of biases. So you cannot listen to people, especially if they're on YouTube. Do not listen to them. They give you hope. And yes, we all want hope. But that's a problem with human nature, right? We thrive on hope. Not good for the markets. Markets are random and abstract. So our emotions mean nothing in the eyes of the market. Look at the levels. Look at the structure. And right now, the structure, this structure on XMR and on Bitcoin, they lean bearish. They lean bearish. But I'm not going to call them a bearish trend. I'm not going to call this a bear market because it's none of those things. But it leans bearish, which means there's a chance we take out those supports. But how much lower do we go is the question. I don't think we're going to go straight to 20K. And even though anything is possible, and you have to have an open mind and be prepared for anything, and the only way we can do that is with risk, I think 20K is a lower probability. All right. I said that also about 40K, and we went to 30K. So again, I don't marry these opinions. I adjust, and that's how you have to do it. All right. You adjust your expectations and your risk. All right. So good question. Now let me see. Please no casuals. Rose from Houston. Hey, welcome, Rose. All right, so Savi from Brooklyn. Hey, I remember Savi from Brooklyn. I know you probably don't talk like that, Savi, but at one time everyone in Brooklyn used to talk like that. Hey, forget about it, like that, right? Okay, so Bitcoin head and shoulders on weekly. Yeah, so someone brought that up. Maybe it was you. Someone brought that up in a recent stream about the head and shoulders, and you could see it also on the daily. I mean, you can see it. It's up here, right? You have this one. That's going to stand out on the weekly because it's a pretty large magnitude one. You can even argue this little section over here. You can argue that's a head and shoulders. But the thing with these head and shoulders is they're just a pattern, all right? In my opinion, the best place to deal with a head and shoulders, if you're going to deal with one, is here, the right shoulder. But the traditional way is you're supposed to take the break, okay? That's the traditional thing. Never go by those traditional things because it's too obvious. The whole world is in on that. So even though it worked this one time, the problem with these things is there are lots of fake outs. And then people don't manage their risk effectively. They hold on because, oh, it'll go my way. It'll go my way until it wipes out their account. So don't go by that here, especially near a major low. Look at the support levels. As long as that level holds, I don't care what pattern shows up here. As long as that level holds, I'm expecting buying activity to come back into the picture at some point and give us a buying pattern. So it's the level first that carries the weight. The pattern can give us confirmation. But keep in mind, patterns appear randomly. Okay, so just something to keep in mind there. All right, let me see what else I got in the other chat. Good. I'm not getting tons and tons of questions like I usually do, but that's okay. That means I can answer more questions. So let's see. Okay, I went over Euro. All right, let's see. Curie, C-U-R-I. Let's see, what is that? C-U-R-I, some kind of stock. Curiosity Stream. All right, so let's see what we got here. I like this push, this initial push. This is a change of structure, right? At least it's trying to prove that because it went back up to this resistance up in here, but it didn't clear it, all right? So that's a good start, though. That's a good start. Since then, it gave us this higher low, okay? It's established. Okay, that's cool. That's what it should do after a nice bullish movement like that. And now it's trying to give us the follow through. But today it's red. All right, so now here's the thing. You have a little bit of a conflicted situation here. You have a potential lower high and within a broader bullish structure, right, after a higher low. It's conflicted because if this thing sticks, which it looks like it's trying to do, then you may get that double bottom. So I would wait. If you're looking for longs on something like this, I would wait for like that 12.25 area. That's the more conservative thing to do. Wait for another double bottom and reversal. That would be a nice failed low or double bottom within a broader bullish structure. Those tend to be nice higher probability setups if you have the patience to wait for one. You don't always get them. But when you see something like that, basically you're buying the low of what looks to be a consolidation, right? Typically a wave 4. And we can actually count that on something like this. If we just look at this structure here and we want to count waves, right? We can say there's actually, you can't even see, this is like a big 1. That's a larger degree 1, right? This is a potential 2. So you may still be inside of this 2, and it may be a compound corrective move or basically a consolidation. So in those situations, just like Bitcoin is in, very similar, the best places to get involved would be near those lows, right, for a swing trade. But it is a good idea to wait for confirmation instead of stepping in front, because if it clears those supports, that's not what it should do. And if it clears those supports, what that tells us is that this resistance is still in play. Okay, and then you know, it just goes back into its bear mode, and you don't want to get caught in something like that. So again, I can't emphasize enough how important it is to take stop losses. Take those losses and just be happy with them, because they save a lot of money. I can't tell you how many trades we've been stopped out of. Right here, I'm just going to show you one real quick. I always have to remind people of this. Gold was a swing trade long at 18.99.5. Okay. 18.99.5, stopped out the next day for 30 points, went over 100 points lower. I'm so glad I got out of that for a 30-point loss. If I was one of those people that, oh, I'm right, yeah, I'm right, yeah, I know what I'm doing, yeah, gold's strong, yeah, I saw the news and gold. Gold's 100 points against me. How can that be? Right? That's those opinion people that they think they know what they're doing, right? So the market doesn't care what we think. Take the loss. That was a structural loss. I took the loss and I saved myself a lot of money. You have to respect those stops. I know that they're annoying. Trust me, they're annoying, but they save you money over time. Okay, enough of that rant. Let me see what else we got here. So that was a good question on Curie. All right, we have one for Unity Software. All right, let me do Unity Software. I know people have asked about this one. So Unity Software is in a similar situation. I mean, it looks similar to that Curie situation. You have these I want to call these recovery structures, right? I call it a recovery structure. I mean, it's just a name I'm giving it because it's changing this bearish situation, okay? It was making lower highs and lower lows, pushing people out of their shares, and then it changed. It took out this resistance and it changed. Okay, that's cool. This is usually now the more, when it comes to these type of situations, this is usually the more conservative time to get involved because you have all this buying activity before you. All right, but you don't want to be buying it right now because you're right off of this high. There could be resistance up in here. So you want to look for the next support in this situation. And the next support would be the previous resistance area. That would be one support. And that area would be, on the case of Unity Software, around $103, around there. That would be one potential support if price can reverse there, all right, for a possible swing trade. Otherwise, you're looking at a test of the mid-90s again. If that mid-90s is cleared, then you're looking at, much lower prices because this structure is then compromised. You don't want this structure to be compromised if you're long. So if it takes out those supports, again, that's why the importance of the stop. You take your loss and then you see what the market wants to do from there. Is it going to fake everyone out and then recover again and stay within this broader bullish structure, or does it keep taking out supports? What makes this more tougher to deal with at times is the slowness of it. I mean, that's why Bitcoin is so annoying because it's just so slow to make any real progress, right? That's why patience is so important. In this environment, a lot of times it's better to just stay out completely and really wait for some good opportunities, which are rare to begin with. In this environment, they're going to be even more rare. So if you find yourself with lots of trades, you know, if you have in Bitcoin, for example, right, you're not day trading Bitcoin, but you have 4 or 5 trades a week, that's way too many. There are 4 or 5 opportunities on the swing trade level are not appearing in such a frequency. You may see 1 or 2 good ones over like a 2-week period. So like 1 per week is within reason right now. So just to kind of give you a gauge. All right, so thanks for asking about that. Let's jump over to the other chat here. So let's see. Pokar, okay. BKNG, oh, that's a good one. Someone had asked about this earlier in the other chat. BKNG, why is my chart taking forever to update? Am I getting kicked off here? Hold on, let me see. Am I giving my internet giving me a hard time, or maybe it's just them? Maybe it's just them. Okay, there we go. So Booking Holdings. I want to call it Burger King, but it's not Burger King. The ticker looks like Burger King. Anyway, so BKNG. Now here's the situation with. Oh, actually, you know, I'm thinking of. I think someone was asking about BNGO. I'm sorry. Anyway, so here's the situation. Make sure I got that right. BKNG. BKNG. Okay. So here's what you have. This looks like a Head and Shoulders. Again, I'm not going to emphasize the Head and Shoulders situation because that's really not as important as the levels. Bigger picture here, this bigger picture trend is not exactly bearish. It's higher lows and higher highs. Only recently it's been consolidating. You have a common level right here at 21. Man, is that in dollars? It's ridiculous, this price. Okay. So 21.67, who do they think they are? Amazon? You have this level here, 21.67 or the 21.50 area. Looks like it sort of bounced off of that, bounced off of 21.72 today. So it's trying to hold that support. That is your focus area. That's what you want to keep an eye on. Buying this right now, though, is a bad idea because you have a lower high that's established. It's trying to make the lower low. Some buying stepped in, but that's not enough. The candle is still red. The market is closed. This candle is not exactly a nice qualifying bullish reversal pin bar. I mean, you have a tail on it, but usually the open to the close needs to be more narrow. So this is not, doesn't qualify. This is likely to take out the low tomorrow. So this is a great location for a potential swing trade long because if you reverse, maybe it gives you a failed low off that support, that would be a good place to try. Okay, so you want to focus on that support level and see if you get to get that reversal off of a better price. Until then, until you get confirming price action, I would just watch it and not do anything with it. A very common mistake in these situations is people will step in front of it, and sometimes it works. The market likes to give random rewards, and it reinforces ineffective behaviors. No different than a casino. You go to the casino, you put money in the slot machine, and you win, and you think that there's something to that. Or some people start to think that, yeah, I got a positive reinforcement, right? Just like, you know, with dogs, and then you ring a bell, and they think they're going to get food or something, right? It's kind of like that. So, yeah, I would hold off on that until it gives you a better confirmation instead of stepping in front of it. So thank you for asking about BKNG. Great one for the radar. What's also interesting about this, I don't know what their story is as far as market stock. I don't know what their correlation is. I'm guessing this is not really a market stock because, I mean, with the market green today, NASDAQ up 150,000 points or whatever it is, this thing should be green. So the fact that it's red today is not exactly a great sign relative to the NASDAQ. Okay, so thank you for asking about that one. Let me move along. Let me see what I have here. Can we please have a look at Ethereum? Wow, you know, no one asks me about Ethereum anymore, Kavi. No one asks me. So let's take a look at Ethereum. No one. People used to ask all the time. I need to see Ethereum. I need to see XRP. Okay, so let me see. Is that the right one? Yeah. So here's Ethereum, and this isn't too surprising. Now, you know, Bitcoin is hesitating. Ethereum actually has the buy signal, all right, at that pin bar at 1851. And if anything does its own thing or tries, I mean, it's probably Ethereum. And the buy signal is following through. You took out this resistance at 2035 so far. Now the candle hasn't closed. So I can tell you this. I mean, this is a good level for this type of price action to occur. That's basically a double bottom. or failed low, and you have this little double bottom situation right here, this little mini one right there. Those are good things for the bullish story. And if you're in something like this, if you got into this, we didn't call Ethereum, but if you got into something like this, there's nothing to do here but let this thing try to follow through. Now, that resistance that it took out, 2019, basically, that's a minor resistance. So it's really nothing to throw a party over. The main resistance that it needs to clear is this area here, which most of the altcoins have a problem with. As we saw earlier, they all look the same, right, in that regard. So, which means this thing may run to a point and then turn again, especially if Bitcoin can't follow through. If Bitcoin turns and goes back below 30K, this probably won't go very far. That's why you need to be nimble. If you're in this, you try to let it do its job until it turns and gives you a sell signal. You'll have to make an adjustment at that point. Your risk right now should be defined from basically what, 1717? You can round that to 17 even. That's your risk based on this thing right now. Should you buy this now? I wouldn't buy this now because the risk of failing is so high, especially as you go into the middle of this consolidation. That's usually a place to distribute risk. So if anyone got it, if anyone has this from a good price and took it off of such a signal, that would be a time to be reducing risk or distributing risk into that random area. So that's Ethereum. I mean, it's a nice look, and it's nice if Bitcoin could follow through with that because this thing is acting relatively strong. That's what you want to see when you're in it. When you're not in it, very risky to take because you're taking a lot of risk and you're going into an area where probability is not so favorable. All right, so thank you for asking about Ethereum. I have Boyan wants to know about ICP. ICP, this was a big hyper. This is a big hype one. Look at this. Look at this one. So ICP, right? I remember when this first came out and people were going, oh, ICP is going to be blah, blah, blah. It went straight to the toilet. I mean, that's where it went, straight into the toilet. Look at this. So this thing is 43. This thing was as high as what? I don't know if that's a bad tick. 28.31. I don't know, but this is garbage. Okay, if I have the right symbol here, ICP USDT. Yeah, that's it. There's nothing to do here. All right. Most of these altcoins, I can see maybe why you might have some interest in it because it's trying to pop. It's trying, but you want to talk about garbage hype coins. This probably has to be one of the biggest ones. So I would just not touch this. I don't care about this little pop. These things don't trade on their own. This could be the result of some people in a chat room hyping it again. Oh, it's going to go. Blah, 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 blah. They're going to change the world. They're going to do this and they're going to do that. Blah, blah, blah. Right. Yeah, right. Okay. Yeah. Nice. It's given back what, more than 90% of its move or whatever. So just like back here, right? People get excited. Oh, it's going to go somewhere. It's going to go somewhere. Right. It's going to go lower. So I have no faith in these things. It doesn't move on its own. If it moved on its own, I would say, okay, worth keeping an eye on. If you really like what they do and you want to gamble, right, with a lottery ticket, because that's what it is, and you want to buy some, your stop would have to go at 29.45. You're looking at maybe 28, maybe even 25. That's where your stop would have to go. Because otherwise, I mean, this thing it could literally go to zero or close to it. So that's all I could say about that. You want to try to go for that, maybe that little change, maybe you have something there, but these things carry very little weight. The charts on these coins, because they follow Bitcoin and because Bitcoin needs to do something significant, they're dependent. Their charts are the formations that we see in the charts are not going to be as reliable. That's why I'm so skeptical on something like this. I could be wrong. Maybe this thing goes crazy, right? But they don't move on their own. They've proven that over and over. So until they change that, I have very little faith in something like this. If this was like a biotech stock or something, I would say, okay, you want to give it a chance, or let's wait for some more structure or something like that. Okay, anyway. All right, so Boyan says ETH will go up more. Well, if ETH goes, yeah, maybe it will. But like I said, Bitcoin is the leader, not Ethereum. A lot of these coins follow Ethereum, but Ethereum follows Bitcoin. So if Bitcoin can't agree with it, they're going nowhere. All right, so I'm sorry to deliver that reality if you don't like it, but that's what the market has repeated over and over again. Okay, HDDR. Okay, no problem. Really helped me with your first trade. Oh, nice. Okay, that's good. I hope if you've just started in this, I can tell you that, it probably would be a good idea to work a lot on paper and experiment with things before putting real money at risk, because to get started in an environment, has to be the worst environment to get started in, because the volume is gone, and there's a lot less momentum. Actually, in a way, it's a better environment to learn from because it's harder, but chances of losing money are high. I'll just put it that way. So Zelta, okay, from Latvia. Hey, welcome. Okay, look at SAP. All right, SAP. SAP. Is that the right symbol, or did you want to see the S&P? So I have SAP here. So recent price structure is somewhat bullish, and I mean, you do have the higher lows and higher highs. You closed this gap, which is good. Maybe, I don't know what that's about. Maybe either that's news or that was some kind of adjustment. Whatever that was, it's closed. Okay, but now prices, in more recent price action, price is starting to hesitate a bit. So you have the higher high. It's trying to develop this higher low. If you want to go for the breakout, again, this is depending on the stock market. I don't know how correlated this thing is, but you're looking at this level here. What is that? 137.5. That's where you're defining risk from. This thing's at 141. What you're hoping for, if you get involved in this, is you're hoping that the momentum continues and you have the breakout. And if it doesn't, you're getting stopped out for like $4 or $5 risk, whatever that is. Okay, maybe a little bit more than that. Thing is, it's hesitating, right? It's hesitating. It's right in the middle of this range. What if the stock market has a significant pullback over the next few weeks? What if the S&P pulls back 10, 15%? How is this thing going to behave? Is it going to hold up, or is it going to break its supports, right? So that's what you have to keep in mind as well. The risk of retrace is very high in the stock market. So if you really like the stock, I mean, I've seen much better setups than this. So it doesn't really have the best setup. You just have structure generally in your favor. But since you're in the middle, I mean, it's like the probability is like equal, that it may go higher, it may go lower. Also, the other thing you have to consider is the reward potential. You need to clear this high, which is 143.79. You're at 141. That's about $2 maybe $2.50. As long as you're keeping your risk around, your risk is higher than that. Your risk is around $3 or $4. So you need to clear that. You need to clear that resistance to make your reward risk justified. A lot of times if I see obstacles like that and I see it's kind of hesitating, just like kind of like what Bitcoin is doing, then I'm less likely to take a trade. I want something that has an easier time ahead of it. Something that like only has to go to the middle of the range and I'm at 1-to-1. This thing is sort of fooling around in the middle of the range. All right, so I hope that helps. Thank you for asking. Let me jump over to the chat here. Let me see what I got. I got some good questions here. All right, so gold, US 30. Okay, Reza. So I went over gold. I went over gold earlier, so you could just, when I complete the stream here, you can go back and you can watch the beginning where I talked a lot about gold. Now, US 30. Let's take a look. US 30. All right, so this is a very interesting situation because it's a red flag. All right, and what I mean by that is this is the Dow, and it's a major index, as we all know, and it's red today, okay? This thing is red, and it's minus 213 points. What is the problem here? Why is this thing minus 213 points, but the NASDAQ is up 3,000 points? I'm exaggerating, but why? What's up with that? That is a red flag because these things should be moving together. The Dow is acting relatively weak, which implies something about the industrials. Why are those 30 stocks acting this way? What's the problem? Are they anticipating higher interest rates, which is not good for industrials because they usually borrow a lot of money? I don't know, right? I'm getting economic now, but I don't trade on that type of information. I just look at the charts, and what the chart is saying here is potential triple top. And you have a red candle close, and it took out yesterday's low, which means there is a sell signal in place. Does it follow through is a different story. But if I was going to short something, it should look like that. Okay? If I was going to short, it'd be nice if the NASDAQ looked like that, but it doesn't. So that conflict, these things should not be acting this way. With the Dow acting like this, that means there's a problem somewhere. And the NASDAQ may just be full of hot air, all right, when we compare them. So that's a good example of a sell signal. I mean, look at the NASDAQ, 177 points, right? And the Dow is negative. That's unusual. They should be moving together. So in that regard, if you're going to short something, if you want to try to play the short side, this is the weaker one, and it's showing those signs early, right? For whatever reason, someone's pricing something in there, and it shouldn't be doing that if the market was healthy. Doesn't mean the NASDAQ won't go further, but this is why I'm so cautious with stocks, and I keep saying the risk of retrace is high. There's a lot of hot air in these markets, and there's a lot of hype, and there's a lot of nonsense going on. The stimulus, there's a lot of that going on, which is when that hot air comes out, it's usually very dramatic, and I don't like to get caught in those situations, right? Especially overexposed and all that stuff. So that's why it's just better to be cautious. Think of it this way. If the market keeps going higher and higher and higher and higher and higher and higher, and you're not in it, are you losing any money? I hope you say no, because you're not. People say, oh, yeah, I am losing money. How are you losing money? If you're short, you're losing money. But if you're missing the opportunity, that's okay, because there are more opportunities in the market, right? At some point, the market will pull back, and it will give you an opportunity. That's all you have to wait for. You don't have to do anything, right? We define the rules in this game. You make your own rules. That's a great thing about trading, is you control, or you should be able to control, your choices. So you don't lose any money by being wrong and not being in the market. I'd rather be wrong all day long and not be in the market, okay? So anyway, good question there. Let me see what else I got. So that's the Dow. I got a question here about BCH. All right, so BCH obviously is going to be a Bitcoin follower. Now look at this. Again, kind of like Ethereum, trying to do its own little thing here. But I'm not going to get sucked into this, right? It looks all nice. It's taking out the little minor resistance. It's going to lure people in who are watching their smaller time frames and all that stuff. But here you got this, you still got this resistance in place. As long as that's in place, this thing is just range bound. It's not really doing anything. So if you're not in it, this is really not a good place to be getting involved. If you want to get involved in these things, and same goes for like Ethereum, if you want to get involved in these, the best thing to do, or I should say the more conservative thing to do, would be to wait for some sort of higher low. Okay, we waited for that on Bitcoin. Let me just pull up Bitcoin again. See, like Bitcoin should be doing better than this with those coins acting like that. This, I talked about this little higher low situation on Bitcoin, right? I wrote about that in my TradingView article the other day. That's what you want to see in BCH. You want to see that in Ethereum, and that will offer at least a better swing trade opportunity. These situations right here, you could say, but it's in there. Okay, it is, but if you didn't take that, now you're chasing it. So either you wait for another one, or you let this thing go and at some point deliver another opportunity. But I suspect if Bitcoin doesn't go very far, all these things are going to get stuck in the middle here, and they're going to give you another sell signal. Kind of like what we had back here. This, it got everyone excited. Oh, it's going to 80K. Someone said, oh, it's going to 80K. Right. No, Bitcoin didn't go to 80K. So don't get all caught up and excited about these things. A lot of people, you know, it's human nature to react to what we see. But we cannot see if there's real selling activity. If that selling activity is passive, not active. If it's passive, meaning it's sitting there and absorbing buy orders, we can't see that. It's not going to show up as a red candle. So we don't know if this is going to be where this thing turns red, right? It starts to turn red when what? Active orders come into the market, and that's what we react to. So you're reacting. You may be reacting to this. Don't react. That's why waiting for levels and waiting for confirmation is usually the more effective behavior. All right, not all the time, but again, I'm not interested in random. I want consistent. I want to be able to do the same thing every time and at least get a similar result. That's the best we can do. I don't want to be like, oh, well, I make some money here and then I give it back. And I make some money over here and I give it back again. I make some money here and I give it back. Over time, not only does that wear you out psychologically and ruins your confidence, but there's also costs involved. It's just not worth it. So you're better off waiting. Anyway, so thank you for bringing that one up. BCH. All right, let me see. Hey, south of France. Nice. Flower, welcome. Flower Power. So, SOL. Let's take a look. SOL, USDT. Let's see what we got here. All right, so look, I see we're getting these across the board, right? Look at this. Same situation. Obviously, they're all looking similar to Ethereum. They're getting everyone's hopes up. All right, look, that's cool if you're in it. But if you're not in it, can't chase. Not a good idea. These things haven't really proven anything. This little structure, although it's nice, if you took that risk back there, it's nice, but see, people get interested now when the risk is not so good. You're going right into this resistance right here, and your risk at this point is defined by 26.5, basically. That's 1 point of risk. And this thing right now is at 33.25, just over that. So you have to take a lot of risk, and you're going right into this area. Like I said, I'd rather be wrong and not be in it, let it go higher, and then let it provide a better structure at some other point. I have very little faith in these things. They don't trade on their own. This thing does not trade on its own. If Bitcoin turns the wrong way, they're all going to turn the wrong way again, like they've been doing over and over. So don't get sucked in. You know, you get all these people in these chat rooms and all this other stuff because someone's hyping it or whatever, and they all get sucked into it thinking, yeah, I got it this time. Now it's going to go to the highs, and they're just getting sucked into noise, just random noise. Okay, so thank you for asking about that one. All right, how am I doing with time? I'm going to have to wrap this up soon. Let me just check. Okay, not too bad. Okay, a few more minutes, and I'm going to wrap it up. But again, I appreciate everyone's questions, and I'm able to get through more of them because I'm not getting overrun on TradingView like I always do. Let me see here. I'm just wondering how many people. I got a little more. Man, TradingView is slow today. All right, so let's see. STORJ, StoreJ. Let's take a look. Is that a stock? StoreJ. All right, it's 5 symbols. 5 letters. StoreJ. Oh no, it's a coin, obviously. Let's take a look at StoreJ. All right, again, similar situation. Man, this recent structure sucks. Talk about getting caught in a hype coin. This is hype. People get caught in that nonsense, and look what goes on. So here's the thing. It's similar pattern, right? We just saw this pattern in SOL, right? Similar pattern. Look at this. Sucking people in. You still have a resistance here. Hasn't cleared that, not even close. This little blip over here at 68 cents, it's a minor resistance. It doesn't really mean anything. It carries very little weight. So you're looking at this, all right, which is 85 cents. If this thing cannot clear that, and it just goes up maybe to like, 75 cents or whatever, gets everyone all excited, and then it turns red and blah, 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 then it's another lower high. Not worth it. These are not worth it. Especially for swing trades, forget it. I don't like these things at all. So I would say wait for better structure, especially in the face of this thing, lower highs and lower lows. A lot of altcoins look like this, but this is so pronounced. Lower highs, and your main lower high is right here. So until that's compromised, that bearish structure is still in play, and it's within reason to expect a lower low. So I'm not willing to take any risk on these. If I was going to call a swing trade in anything, it would be either Ethereum itself or Bitcoin. Okay, if I was going to call, because at least they have more, they're the leaders at least, and Ethereum less, because Bitcoin is the leader. Because again, if Bitcoin's not doing anything, so these things are having their little party. But as soon as Bitcoin makes a decision and it moves, and if it moves lower, these things are going to follow. Right? Until they prove otherwise, I have to go with that. So thank you for asking about that one, StoreJ. Okay, T-Fuel. T-F-U-L. What is T-Fuel? I guess that's a coin, right? Is it a coin? Yeah. So USDT. Let's take a look. All right, so Theta Fuel. Oh, I guess this is part of Theta. I guess this is a relative to the Theta token. I mean, look at this. All right, so it's got a different structure compared to the other ones. Different structure. For one, let's see, you have this buy signal. The buy signal seems to be following. I mean, look at this. You have the lower high over here. Generally, though, you have higher lows. This is a higher low. This is a higher low in this area here, generally. Right, that higher low is defined by 35 cents. But you also have this lower high, and you have this triple top in place. This thing, although it looks slightly different, probably doesn't trade on its own. So this is not a great spot. If you want to take the risk, and you give that thing a try, you're going to define it. That risk is going to be defined by 35 cents. This thing's at 43 cents right now. I don't like these coins. Again, they're not leaders. and you need to clear, this is the minor resistance at 49 cents that corresponds to the other ones that we looked at, like that little 35K blip on Bitcoin. That seems to be corresponding, which means you need to clear this resistance up in here, 63 cents, to really say this thing is potentially going somewhere. So at this point, you have to decide if that risk is worthwhile to you. You do have some structural things in your favor, like a potential double or triple bottom here. And it's an old resistance, new support. So you have that in your favor. But what is not in your favor is the leader so far. So it really becomes a point of, are you willing to take that risk and give Bitcoin that chance or not? Bitcoin structure still favors the break of support. So yeah, it's conflicting, right? And sometimes, again, in these situations, we're not going to have perfect information. So it comes to, are we willing to take that risk? Okay, so that's Theta Fuel. Thank you for bringing that one up. All right, let me see what else I got here. Okay, so went over Ethereum. All right, went over SAP. Okay, gold. I went over gold earlier. So if you can go back on the stream there, right? When I complete the stream, you can go back and you can see my whole, I talked about gold for like at least, 10 minutes maybe? Something like that. So check out gold. Oh no, I'm sorry. They were answering my question. That was from like an hour ago. Okay, never mind. I'm a little slow today. It's Monday. Okay, got you. Okay, Thorium says Fed money printing. Right. So, yeah. Okay. I'm just reading the chat here. I'm just catching up. This is from like an hour ago. All right. How about Neo? So I went over Neo, Mike. Okay, cool. Thanks for asking. Slow Monday, and maybe your rants on is Wedge. I don't know. I don't know. I mean, from these altcoins that we just looked at here, people are getting all caught up in that noisy price action that's going on, and it's understandable. You just have to understand, again, what's working against you. We all like to see things that are working in our favor, and yeah, right, looks good. But we may not consider what's working against us. And like if Theta Fuel was its own, if it was a stock, and it wasn't correlated to anything, is doing its own thing, then I would be more optimistic about it. But because I know it just basically, it follows something else, and that something else is not exactly in the best situation, then a lot of this, I give it very little weight, okay? My expectations are very low. Doesn't mean I'm right. It just means I'm not willing to take the risk, okay? And I've been wrong many times with stuff like that. But if I'm not taking any risk, what do I care, right? I'm just not willing to take the risk, and I'm giving the reasons why. So thanks for mentioning that. All right, so let me see what else I got here. Back to TradingView. Argentina, welcome. Workhorse, I'm in this, 1235. Okay, so he wants to know the stop loss. Workhorse, another EV stock. Let's see, WKHS, Workhorse. So look, they've been improving. Okay, they have this nice structural change in place. Okay, we've talked about this, and now it's going for its next leg higher. So he's in from 1235. This thing's at 1693. Okay, not a bad price. Where is 1235? That is, let's see. Okay, that's a good price, 1235. Right? That was on this gap continuation back here. Nice, good price. So as far as your stop loss now, I mean, there are two places you can consider. The low of this candle you're in right now, which is, well, you could say around 15 even. This thing's at 1693. 15 even is one consideration, but the likelihood of that getting stopped out quickly is high. I mean, all it has to do is give this candle back and you're there. The more structural place for a stop would be 1359, or basically 13 even, which is this high or low area right here. That would be the more appropriate place based on the structure. Now, what you need Workhorse to do is break out. You're in the luxury, you're a strong hand, you have a good price. So you have the luxury of sitting back and letting the market decide without having to worry too much, right? In fact, it probably wouldn't be a bad idea to lock a little something in off those highs, because while the buying is there, you might as well capitalize on it a little bit. It's just never a bad idea. I know people, they get upset if they sell like 30 shares out of their 100 and then it breaks out. I could have made more money. Right, but there are going to be all those times where it fails to break out. You could have taken that off the table and perhaps even put it back on at a lower price, and you don't do it, right? And then you feel bad that you missed that opportunity. So it goes both ways. Anyway, what you want to see here, this is a decent close. It's not a bad close. You want to see this thing take out these highs tomorrow. You need to see that. What you don't want to see is it tries to take out the highs and then turns into a red candle, right? It turns into a failed high like this back here. This is what you don't want to see. See this candle back here? Something like that? You don't want to see that. So at this point, again, let the market do its job. If you see a candle that you don't want to see, that's where it's a good idea to make adjustments. Perhaps you raise the stop, perhaps you lighten up a little more. Maybe you have 100 shares, so maybe you sell 50 of them and you only have half the position to see if it could just keep maintaining this higher low. But these EV stocks, they're like the flavor of the week type of thing. So when they turn, they usually get ugly pretty quickly. Like look, CGC, look at CGC, look at this garbage cannabis stock. I bring this up because it's trying to turn here, and this thing's at 24.88. These are like flavor of the week type of stocks, right? And Workhorse for a while, as you can see, go back to Workhorse. Workhorse, as you can see, like with Workhorse, when that negative news came out a while back about what the post office wasn't using their trucks or whatever that stupid news was, it was garbage for a couple of months, right? And then it turned. So just have to be careful. Just have to be careful, and it's good to take some money off the table when you have the opportunity. So I hope that answers your questions. Thank you for asking. Let me see what else I got here. Okay, I got to wrap this up here momentarily. Let me see how I'm doing with time. Hold on a second. Okay, a few more minutes, and then I'm wrapping this up. All right, so thank you again. I really appreciate everyone's questions. All right, so let me see what I got. Could you please analyze the volume a little bit on Bitcoin? So volume doesn't really mean anything. Here's why. We don't have the actual volume. What we see is reported from the exchange, right, which is reported publicly, but we don't really know. We can't see a lot of things that are going by in the volume. So I can tell you that we're probably in a lower volume environment right now, but that doesn't really mean anything. That's why I don't really use volume at all for anything, because it's meaningless information. It doesn't really offer any advantage. I know there's theories with volume analysis, volume range analysis, or whatever it's called, or whatever, but there was a time when there was a lot less information available to people. So perhaps in those times, volume carried more weight. But today, everyone has access to that information. When everyone has access to it, it takes away from any advantage if there was any. So I don't use volume at all. I look at levels. I look at the price action around those levels. And where volume can be important is if it's a generally high volume environment compared to a generally low volume environment. Like, for example, stock market, okay, S&P. Typically, at the open, 9:30 open, that's usually when you have a surge of volume. So often, if there's going to be momentum in the market, that's often a time where you'll see the momentum because there's a lot of volume. But then you look at like noon or 1 o'clock, usually there's very little volume. So not all the times, but often S&P moves become very muted and very noisy, and it doesn't really wastes a lot of time because there's generally no volume. All right, so that's really, I think, where volume offers any type of advantage, just knowing when there's more volume compared to other times. But trying to look at it like statistically is useless. So thank you for asking about that. What do you mean by trade on its own? Bull Marky asks. So trade on its own means it doesn't rely on something else. Okay, biotech stocks, they typically trade on their own. They don't care what the S&P does. If the S&P pulls back 1,000 points, a lot of the biotech stocks, they don't really do much because they're more dependent on specific news of what the company's doing. That's usually what gets it going, right? The S&P may be the S&P may have a big day, right? The S&P may be up 60, 70 points. And you look at your biotech stock and it's up like 10 cents. You're like, what? The stock sucks. It's because it's not really following the S&P. That's what I mean by doing its own thing. Most altcoins, they don't do anything until Bitcoin makes a decisive move. They jump around here with their stupid little noisy moves, blah, 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 but it's meaningless, okay? Because they're all a derivative of Bitcoin. I mean, that's the behavior now until they really prove to do their own thing. And to do that, usually, back in February, March, April, we saw some coins trying to do their own thing, but why? They were really heavily hyped coins. Someone was in a chat room somewhere pushing all kinds of nonsense and sucking all these people in. So you had some unusual behavior. But once Bitcoin set the tone, it didn't matter. They all went to garbage, right? So that's the thing. They don't trade on their own. That's what I mean by that. So thank you for asking. Okay. Oh, so Nasi put that. He put that. Okay, cool. All right. So let me see what else I got here. One more question. All right. So went over Neo, Slow Monday. All right, Boyan, lovely channel. Okay. You mentioned 1 to 2% is a daily goal, but surely it is not done daily, but rather. Okay, hold on. Let me see this question here. Let me read this carefully. So, but surely it is not done daily, but rather one shot over 1 to 2 weeks, and then average for the year. If it comes to 1% daily, is awesome. Yes, Boyan, you bring up a good point. And then IFC asks for open, the stock. Okay, I'll do open. Boyan's mentioning, right, so people try to take it like literally, and it's understandable. Like, I need to make my 1% today. I have to make my 1%, but it's actually, like Boyan mentions here, it's really more of an average. It's an average over time because you're going to have losing trades. There's no linear way to do this, whereas like every day, I'm going to take this one signal and I'm going to make 1 point every single day. Try doing that. You figure, oh yeah, how hard can it be to make 1 point every day? It's actually very hard because we can lose. That's the problem. And if we're losing more than we make, it really makes a mess of things. So yes, it's an average. It's an average performance over time. And that's why having a good reward risk, meaning at minimum 1 to 1. 1 to 1 is not great, but it's better than less than 1 to 1. Okay, I'll take a 1 to 1 depending, but it's a more aggressive trade. You want 2 to 1, 1.5 to 1, 2 to 1, 3 to 1 is great if you can find that and if the market delivers it. But that is what allows you to have those higher average profitable, percentages over time, is because when you lose 1, but when you win 3 times that, right? That's how you get ahead, because you're going to have losing trades. You need to make sure that those losing trades are smaller than your winning trades. It's easier said than done, especially when people are full of hope. You're being fed hope by fake gurus and you take your stop away. Like I always keep emphasizing the stop. Take those small losses because they protect you over time, which, there'll be that one time when the market gets hammered and you're caught in it. And believe me, I've been there. It sucks. Okay. So thank you for mentioning that. Okay. Open IFC. I'm going to do open and then we'll wrap this up. Okay. So Open Door Technologies. It's a stock. It's a nice looking stock. So you have, I've been seeing this pattern across the board. You have this attempted push here, right? That initial push followed by the higher low. How many stocks have we seen that look like this, right? Higher low. It's going for the breakout. In fact, someone mentioned a stock earlier today. Which one was it? I forget which one it was. And it looked very similar to this, trying to break out. So in this situation, it hasn't broken out yet. The market is now closed. So do we get a red candle tomorrow, or does it follow through? Does the NASDAQ go red tomorrow, or is it going to go up another ridiculous 300 points? So the low here is $16, right? That's where you're defining your risk from. This is pre-breakout. So you have to decide. Are you willing to take that risk? $3 of, what is that low again? 16, this thing is at 17.86. Not low. Okay, no, it's about $1.50. I'm sorry. It's about $1.50 of risk from this point. You need to make at least $1.50 to justify that. Can it go here? 20? Yeah, so it's not unreasonable. All right, it's not unreasonable. What I don't like, and again, we saw this before. You have to decide if you're willing to take that chance that it follows through to the next resistance, which is here, up in this 21 area. You need to take the chance that it does that, or if it doesn't, you need to make an adjustment. And what concerns me about all these stocks that look like this is we have a NASDAQ and an S&P, right? Especially that NASDAQ at its all-time highs, no pullbacks, which means risk of retrace is high. We have a Dow that's negative, all right? And so we have a mixed market, and then we have these stocks that are attempting to break out. They're at a resistance. They might break out, but the market is potentially at a peak. I've been saying that for a while. Like I said, I've been wrong, and you may get that follow through. right? We have a couple of longs on, and we're capitalizing on that, but we know the risk, and that risk of retrace is high. So you have to decide if you're willing to take that or not. Like for me, I prefer to try to get into near the higher low if I can. But if you're more aggressive and you want to go for that breakout, this is not a bad idea. It may run a bit, but you need to make sure that you protect yourself if this thing doesn't cooperate. All right. And I don't know the correlation with the stock market, but if there is a bigger sell-off, like again, NASDAQ minus 300, keep in mind, we're going into NFP this week, and that can lead to unusual behavior or very erratic behavior going into NFP. If there are any surprise comments or something, some political catalyst or whatever, that can change things quickly. Everything looks beautiful now, but things can change quickly. That's why, the focus should always be on risk. So that's why I always emphasize that with these things. So 1-to-1 is within reason. Maybe it goes further if you can clear that resistance up in there. But the general structure is at least improving. So, you have some things going your way, but you have a broader market that may be limited. So I don't want to discourage you from taking a trade if you're interested in something like that. I just want you to understand what you're dealing with and what variables can work against you. And if you see them working against you and you're in that swing trade, you have to be open to the adjustment. Okay? That's really the key thing, because again, people always want predictions. They want absolute, like, is the guy is going to be right? Bitcoin's going to go here, or this stock's going to go there, and blah, 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 blah. And then, it doesn't go there. No one can predict anything. As much as they say, "Oh, I'm right 95% of the time. Just come to my chat room. I have a 95% system." Blah 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 blah. It's all nonsense. Okay, they usually cherry pick those numbers, that 95% right nonsense. We don't know, and there's no way to really pinpoint a probability. So we can define risk, and then we have to decide if we're open to taking that risk. When the market is generally near highs, for me, I like to keep risk low. I like to reduce risk or just not get involved. When markets are near lows, which we have not seen in a really long time, not even a minor low, when a market is nearer a low of a broader bullish trend, risk is going to be, at least bullish risk, is going to be more favorable, right? It makes more sense to take a risk at that point, because chances are the market will find buying activity, or at least attempt to go back higher off of that higher low, right? That's the way you have to look at it. But when the market never pulls back, right, and we just keep getting high after high after high after high, and everyone's complacent, and you turn the news on, all-time highs today, all-time highs, again, all-time highs, we tend to believe that we're just going to keep getting all-time highs. But I'm not bearish. I'm just extremely cautious. Just like Bitcoin at 65K. Who was calling for 30K at 65K? Who? No one. No one was calling for it. Everyone was saying 70K by next week, 100K by next month. Right, yeah, okay, 30K. No one expected Elon Musk to come out a few weeks after 65K and say, oh yeah, we're not going to use Bitcoin. No one expected that. So that's what I mean, okay? Don't get sucked into all this hype and this hysteria and all this other nonsense. Focus on the risk, right? That's the best we can do. And if the risk is uncomfortable, like for me, for example, like stock like this, I just would leave that alone and look for a better setup. That's my choice, right? And that's why I prefer not to get involved. And if I'm wrong, I don't lose anything. It just goes up without me. And I'll go find another opportunity somewhere in that at least presents a risk that I'm more comfortable with. Okay, so that's it. All right, cool. So I'm going to wrap this up. I know I talk a lot and I rant and stuff like that. I appreciate everyone's questions. Oh, got Schwartz from Romania. Hey, Schwartz. Good to see you. All our regulars. I owe my regulars today. Thank you. Nice to see you. I have a lot of friends in Romania, apparently. So, cool. Very nice. So let me leave you with this. Let's just go back to Bitcoin here real quick. So, again, like I said, lesson to take away. Do not react. Learn to anticipate. Do not react. Meaning what you see on the chart is a derivative of order flow. We can't see why Bitcoin is producing this candle here. We can't see the accounts that are selling into this. We can't see where their limit orders are. We can't see how active they are with their market orders. It doesn't matter whose order book you're looking at. They're not going to show you that information. I don't know where Elon Musk's account is. I don't know how much money he's got in it. I'm sure it's a lot. And I don't know where his orders are. It would be nice to know, but I don't know. So because we don't know that information, we have to guess things. My point is, don't react. What you want to do is let the market prove itself. So what we can do is we can come up with scenarios and say, okay, if this, then based on this, this is what should happen next. If this doesn't happen, that implies something about the order flow, right? That's what we have to look at. So 35K is a potential resistance. It's a potential place for selling activity to appear. At the moment, it might be appearing. We have to take out that low. And if it takes out that low, we probably can see a 30K test again. If 28.5 is cleared decisively, meaning we close below it, 26K is next. That's the market showing its hand. I can't predict that. All right. If we take out 35K and we go higher, we could see 40K again, because that's the next resistance, possibly 41K. In that situation, all those altcoins that we looked at with those little teaser pops that we've been looking at, they'll go higher. And they'll say, oh, that bald guy, he was wrong. I stayed away from this thing, and now look at it. I missed it, blah, blah, blah. You have to decide if you're willing to take that risk. But again, I'm not optimistic because there's too many obstacles in the way for Bitcoin. I'd be much more optimistic if we can clear 40K and then start showing positive structure. I would be more optimistic in that scenario. Okay? So just to clear up any questions if people think I'm bearish, I'm not actually bearish. I'm just cautious. All right, so cool. Thank you again, everyone, for your great questions. If I missed your question, I apologize. I think I got everyone's questions today. Also, you could catch me in other places during the week, or every Monday, again, I try to stream on TradingView, and over here too, I simulcast so I can get more questions answered. I want to thank you all for your great participation and your kind words and everything else. And just keep it cool out there. No reason to overreact. No reason to over dramatize. We have NFP this week. Keep an eye on that economic calendar and just be prepared for things to get slower as we go into NFP, and then all eyes on NFP, right? If there are any surprises, we can see a range expansion one way or the other. There's no way to know which way. So just don't get stuck on any opinions. All right, that's really the best thing, and keep your risk always in focus. If you're not sure, don't take the trade. That's the best thing to do. Don't take the trade even if you were right. All right, I'll leave you with that. So again, thank you so much, everyone, for participating. Join me for my next stream, and thank you so much for watching.